And it seems like, wow, what a week of trading. Welcome back to the show, folks. And yeah, if you're like me, then you spent yesterday afternoon, right after the close, awaiting earnings. And we did get some of the biggest names in the world releasing earnings yesterday, including Apple, Google, Facebook, Amazon. And of these, I guess Apple's the one that sort of outperformed the most as far as positivity and also the stock moving higher. We are in a big contango situation in the VIX. We didn't see the real vol crush yesterday that some had speculated we would see. I think that having a lot to do with like the very negative economic data which we were confronted with earlier in the day yesterday. You know, once again, we've got this very negative economic data combined with the market rallying, and I think that seems to be the clear reason why the VIX is still kind of elevated here around 24 and change. Some people would say that's crushed, but the futures have maintained their elevated state. We're seeing VIX futures over 2 points higher than the VIX, which is a big spread here. So, you know, the term structure looks perfect to short right now, and it's, you know, I've been trying to lay off of it just because I felt that we could get a big downside move here at some point, but it's very tempting to look at shorting the VIX. So let's look at that here, and I want to get on with some other setups. I had a very nice trade yesterday in Kodak. Kodak, if you've been following it, ripped to the upside. It had government news. Actually, let's cover that first. I'm just going to run the famous Dave thing, and then I'll be right back, and we can talk about Kodak and some other stocks. Stay tuned for the show.
You're watching Famous Dave on YouTube.
All right, welcome back, folks. And it looks like I'm in ghost mode. Let me see if I can kind of unghost myself here. It's kind of a little wacky. Let me see if I can fix that. So opacity, I'm having some opacity issues here. Why is that? Huh. Very strange. Opacity, 100%. Oh, I'm not sure why I'm a ghost. But anyways, I'm a ghost. So we had a bunch of action happening yesterday. Let's first go to the Nasdaq overnight. Now, the Nasdaq big rally, this is what I've been following though in the last couple hours, is I think this has the potential, once again in perma-bear mode, I think this has the potential to rip lower at some point today on the Nasdaq, and that's kind of the play. Like the best thing that for me today would be for everything to rip lower, because I have a bunch of Lulu puts which are about to expire. So if we look at the Nasdaq here overnight, it did rip lower for a little bit. Let's take a look here. If we look at the overnight action here, and this chart is kind of not spaced the way I'd like it to be exactly, but we saw around 6 in the morning, it got down here to 10,875 down here, that being up only like 40 on the day. That was the lowest, but my anticipation is that we will, this whole thing is going to collapse at some point today. Just because I'm a perma-bear, I guess, lately. But we'll have to wait and see what happens. If we do look at like a 3-year, we can see the we're approaching the highs, obviously, in the Nasdaq. Again, we did take out the all-time highs yesterday, I believe. Or no, did we not? No, the all-time highs was July 20th, 21st, right around my birthday, and you can see us approaching the all-time highs again here, although we haven't quite taken them out yet. However, my feeling is that this does have the potential to rip lower just based on the economic news yesterday. I think a lot of people were waiting for earnings to see what happened, but now that these huge earnings are out of the way, and it just doesn't make sense for us to be at all-time highs with that economic contraction news coming out yesterday and the continued stuff going on. So I've been, shorting this Lulu. If we look at Lulu here, I'll show you my position, but I've got all these puts. I'm trying to be cautious with this because, it's been ripping my head off back and forth. But Lulu today, I just bought a bunch of these puts for like, the most I paid was like 20 cents for them. But, if for some reason we were to collapse today, I would clean up. So, which means it's very unlikely that it's going to happen. But I've got a bunch of these puts here. So, for example, Lulu down 10%, Lulu down 20%. I make $61,000 on this position. So, once again, not likely to happen. Lulu down 10%. I make $16,000 today if we had a 10% down move in Lulu. So, once again, not likely to happen. The other thing is I did yesterday was I bought like just a one lot put spread in W. Once again, Wayfair has just seen explosive up move. Now this company still has not been profitable yet, but both these companies, Wayfair and Lulu, are seen as winners of this like stay at home thing because people sat at home apparently and bought stuff online from both these companies. This is the all-time high in Wayfair, 260. I bought like one put spread for 40 or 50 cents. That's like I think a $10 put spread down here. Well, let me actually take a look at it here. So I bought the July 237.27 put spread, paid I think 50 cents or 40 cents for a one lot yesterday, just on a little shot here. But just amazing rally on these things. Look, this thing went from I think $22 up to $260. Okay, so this is just this year in March, $21, and now it's $261. Just amazing, incredible, irrational exuberance type move here in Wayfair. But if you identified this as being amazingly crazy, even with them declaring negative earnings, you would have gotten killed because it continues to move higher. So I like some of the idea of like buying some cheapo puts, but being kind of short at the money stuff. So you collect decay, your position, you buy some of these cheapo puts down below, but you sell something like at the money sort of straddle type stuff to pay for it. I like that idea in something like Wayfair here. All right, so we've got a lot of stuff to cover here today really quickly. So let's take a look at the Vix Term Structure next. And I just looked in on our friend TVIX for those who, just left your TVIX position. Look, TVIX down to 89 right now. So for those who suffered in this move to 1,000 in TVIX. I know several people who are short this and still are short this. Well, it's finally coming in. We're below 100 now, down to 89 in your TVIX as this stuff continues to decay moving forward. Same thing, UVXY also starting to decay, and we look for UVXY to... Now, remember, these things have not taken out the lows from before yet, right? From before the spike. So this is all just kind of making up ground from before. But with contango at 10% now, look for this stuff to continue to decay pretty rapidly. And that brings us to the Vix Term Structure here. And just a pretty... it looks in a vacuum, this looks just like a great chart here, right? Contango 10%. And this, you would think, oh, well, this is right before expiration. No, this is early in the cycle. We're not even halfway through the cycle yet. So this is 10% per month decay. This is rich decay. Also, look at the spread between the cash and the futures. It's over 3 points, which is just amazing spread here between the futures and the cash. So this indicates to me either that we are going to get a quick down move here in the market, or that this stuff is going to come in. These VIX products are going to go down. UVXY going to go down. VXX going to go down, because there's tremendous edge to the downside here and potential to the downside in these things. Now, why is there such a big spread here? Well, that is a question you kind of have to ask yourself. But it's almost worth just closing your eyes and shorting some of this stuff here, because it's very, very tempting. But I personally am still going to hold off because I'm playing for the down move here in the markets. I think we're going to get another opportunity here. But in the meantime, this stuff continues to decay, and those who have stayed consistently short it for the last month or so continue to make money. All right, so next brings us to Kodak. So Kodak was really the hero of my portfolio yesterday. I don't think ever traded Kodak before yesterday, but we had this. Kodak got a loan from the government to make medical products a few days ago, right? And so here's the progression of days here. So it went from $2 on Monday to $9 on Tuesday, and then it just got squeezed here huge, right? All the way up to 60. So I came in yesterday here, and to me, this was a squeeze, and it's going to roll back down. I don't know where to, but probably below 20 at some point. So what I did was I came in Kodak, and I sold out of the money calls that were jacked. So, for example, these calls, let's see if we can find the right screen here, statement. So these calls were just jacked. So I was able to sell. Let's see if this will do it. All right. So in Kodak, I sold the August 80 calls, the 21 August 80 calls at $2.40. August 70 calls, $2.50. August 70 calls at $2.70, right? These August 70 calls. Well, that one was canceled, but this one sold for $2.50. And then these August, here's August 90 calls at $1. The SEP Strangle, the calls at $5. And so after selling these calls, for example here, selling these 80 calls for like $2.50, I was able, the stock started to roll downwards. And when you've got a stock that's like $35, then it could potentially double to 70, but I think this is like a once in a lifetime thing where it actually got up to 60 there. So as it rolls back down from like 36, 38, 40 down towards from 40 to 30, all of a sudden it becomes much less likely that it's ever going to get to 90 or something. So these calls that I sold for like $2.50 collapsed, and I was able to buy the strike $5 below them. So I sold these August 80 calls at $2.50, and I bought the August 75 calls for a plain 75 cents like 2 hours later. So this was a nice winner. You can see P&L open 870, so a nice little $870 day in Kodak yesterday. And basically I just sold naked calls, and then I came in, and as we rolled lower, I did actually sell some of these puts. I sold some of these 10 puts at $1.10 with 21 days to go. And then same thing in this August 14 area. I sold some of these August 90s, I believe, for $1. I try not to sell anything for less than $1. And then sold these August 70s for $2.50, and then went ahead and bought a lower strike against these. I still am short out of the money calls here, but I continue to maintain a short delta. I was rolling with a delta of like short 70 all day yesterday, and fortunately it was down like $5 from when I started selling it till the end of the day. And these puts, I tried to pick way out of the money puts, like the 15 puts and the 10 puts, and they really, with a down move, they really haven't moved. I sold these 15 puts at $2.50 with a stock like $7 higher, and they're down from where they were. But I'll continue to watch this today, and I might actually get aggressive again and sell more of maybe like the 60 calls or something now that we're back down here. I think that my feeling on this is that it's just going to kind of crumble back down to like maybe like 15 or something and just sit there. I think that people got caught off guard with a squeeze up to 60, but I don't see a return to that level at all in Kodak. But that was very exciting and offset my Lulu, which, I've been my strategy has been to come in every day in Lulu with pretty much no position. The most I've actually gone overnight short was like 50 deltas, but then immediately once I come into the trading day, getting short Lulu, and it hasn't really worked. Basically, I've scratched overall in the Lulu position. I'll have, make money one day, lose money the next day, make money, lose money, which is pretty frustrating for sure. But we're going to have to see what happens. It looks like the Nasdaq is like backing off a little bit again. So let's go to the hourly on the Nasdaq. So the whole thing for me is watching these big stocks in the Nasdaq. Now, of all the companies that declared earnings yesterday, Google was probably the weakest. If we pull up Google, now remember Google has two stock symbols here. There's Google and Google L, but it was pretty much after the close. We are looking to open down from earnings in Google this morning. Facebook, we are looking to open up about $20. Now, the expected move in Facebook was, I think, around $12, so it kind of blew that out of the water. Facebook releasing positive revenue even with the pandemic. Now, usually I don't get too much into the numbers for earnings because remember, with earnings, you can have good numbers and the stock can still either go up, down, or sideways. So I've never in my career really dug into the numbers and tried to make an analysis of, they beat this or they didn't make this, because all of that stuff is such a nuanced discussion that that's what the analysts do, is like dig into all that numbers. Obviously if they completely miss earnings really, really, really badly, then it might be a bearish sign. But beyond that, it's really hard to tell, like, what was there a whisper number? My feeling has always been that even if I knew the earnings number ahead of time before anyone else did, I still wouldn't probably be able to make money based on that, because you never know what a stock's going to do on earnings. But my suspicion with this market is that now that these huge earnings are out of the way, this market does have the ability to finally move lower. But we'll have to wait and see what happens once again. I haven't been real hot on the trading thing lately, but I am once again playing for the big down move in Lulu, which hasn't really occurred. It's been very frustrating for me because we keep getting these little mini down moves like yesterday, and I'm short and I just watch it go down, watch all this money flow into my account, and then I don't cover and I watch it flow back out. That's what happened yesterday with this move. We got all the way down to 316. I was short all the way down and money was flowing into the account, and then I was short all the way back up. Money flew back out of the account, and it's very frustrating. You can see every time it dips down, it gets bought big time back up. There's never, it feels like there's no follow through ever. You get these big down moves, and then it just gets bought. And you can see, like yesterday with the Nasdaq ripping lower, you can see there's just no sellers in Lulu. They take it down as the Nasdaq goes down, but there are no sellers there. In fact, there's people just trying to buy the dip all the time. And I think that's probably characteristic of this market. And until these people have just been conditioned to just always buy the dip, and it always works. And until these people that always do this get burned, it's going to continue happening. So I'm playing for a big down move in this market. I don't know if we'll get it or not, but I have to protect myself to not lose too much money if we don't get the down move. So I'll continue to play for it. I think we are going to have an unraveling of this market at some point, but it just hasn't happened yet for me, or for my positions, I should say. Okay, let's go and say hi to the viewers out there. Hello, what's up, Spencer? What's up, Justin Green? What's up, Eric? And, that's kind of where we stand. I apologize I didn't come on more this week. I kind of wanted to, but I got kind of caught up in the market and everything. So as some of you know, I do have a side job working in the wedding business, which got, of course, very highly hit with the virus and all that. But I am actually going back to work today, amazingly, after like 5 months of no weddings. Has it been 5 months? March, April, May, June, July. Yep, after 5 months, I am actually going back to work today. So that's exciting. And we'll see what happens. So as we come into the day, I think that we are going to get, as much as I'm playing for this down move in the market, if it doesn't happen, we are going to see UVXY, VXX fall from here. So not really a bad time to be short these, I would think. However, I personally am not shorting them at the moment because I think we're going to get a spike at some point here very soon. But if you're willing to take a little risk, I don't think it's a bad move. There's a lot of edge to be short these things right now just because of the nature of the Vix term structure, which is very, very agreeable to be short these things. Once again, here we go with the Vix term structure. Really just a great setup to be short VIX products. If we do go to the ProShares website really quickly here, I'll get out of the way once again, and we can see that there is a lot of time left till expiration here. We are mostly in the August futures still, so we're still, I guess, in the first week since expiration was last week, so we're still in the first week of the cycle, which is what makes that 10% contango even more impressive here. I know our friend Edward, who is one of our moderators here, loves me to do this contango thing, but if we do check this out, we can see that recently, if we isolate, this is going to show once again anything below the red is backwardation, and anything above is contango. And you can see we have been in a state of contango for some time now, and it appears to be moving higher. So this is all positive for people short the VIX and VIX products. So this continues to work out for people shorting these. Now, if I was going to play this, I was thinking about what I would do, but I think what I would do is I would stick to VXX. I would move out past the election to something like the D's, right? I would stick to something like the D's 2420 put spread, right? So, you could potentially double your money, pay $2 for this. It could be worth $4. And if we continue to roll lower, this certainly has a fighting chance of getting there before December as the election rolls through one way or another. The election, I believe, will not be delayed, although that controversy going on yesterday, notwithstanding. So there you have it. Once again, my play here is I'm looking for us to sell off today, but I don't know if we'll get it. The Nasdaq kind of in a range right now. If we look, let's go back to the chart once again here and widen it out. Can I go to chart here? Yes, I can. And we see just kind of, we got to a low around 2 in the morning here and just kind of moving sideways here, but we haven't been able to take out the high of last night here since then. And I really feel like this could crack and move lower at some point, but we'll have to wait and see. So there you have it. That's where we are right now. I'll be continuing to play my Kodak move. Thanks to Brendan for pointing out Kodak for me. I was kind of following it, but he mentioned that he was going to trade it, and then I looked at it and started trading it myself. So that's awesome. As I continue to look for opportunities here while I hold off on the VIX, because I feel like we're going to get a down move here. But who knows what's going to happen? I don't have a crystal ball. Nobody really knows what's going to happen in the market ahead of time. We just have to do the best we can to trade in this unique environment. All right, thanks for watching. We'll see you next time on the Short Vol Show Live. Love you folks. Have a great weekend. This should be a pivotal day here for trading. Hope you guys make money, and we'll see you next time. Thanks for watching.
You're watching Famous Dave.